The analysts expect investors in Nigeria's equities market to sustain the demand for attractive stocks as more corporate earnings trickle in. Timilehin Junaid, research analyst at Norrenberger Securities, joins me for a market focus. Timilehin, thank you for joining us today.
Good afternoon, Esther. Thank you for having me.
Investors have been riding the earnings wave this week. We've had a couple of, obviously, a raft of earnings come into the market. A number of names have been posting some pretty impressive numbers. Well, talk to us about this week. Let's start with this week's best performers.
Oh, okay. Thank you, Esther. So really, for us, I would like to pick up the story from last month. That's January, right? We saw that the equities market has remained resilient. Market capitalization has improved significantly. We've seen that the all-share index also gained 1.5% in the week. And what that means is that we know that January into February signifies the ending of a calendar year, and you expect a lot of these corporate earnings to begin to come in. And then the two major indexes that have done fantastically well so far in terms of our coverage is the consumer goods sector as well as the banking sector. And consumer goods because, of course, the moment we saw that Naira started to pretty much just stabilize around the quarters of 1,500 and the development of the EFM's platform. So that pretty much just helped a lot of the consumer good tickers like Cadbury. We've seen some of the other. The market has reacted to that, priced that in, and Cadbury, as at the close of market today, has gained almost 30% this week already. And then, of course, when the banking started earlier in January, the banking index posted about 9.8%, right? And what that means was pretty much driven by shared interest, renewed interest in Stanbic, the likes of Access Corps and GTCO, and Zenith also, which has broken the 50 Naira levels. And for us, that is pretty much expected. We follow that Tier 1 banks are usually known for being dividend paying. So it's only understandable that we see investors coming to pricing some of this reaction ahead of those corporates.
Right. Still on the corporate earnings, thinking across the names of the companies that have posted so far and the numbers that you have seen so far, would you say that there is a common denominator running through the line items or those earnings that you've seen so far?
Oh yes, there is, and like I mentioned previously, right? It's pretty much around FX stability. And if a further look into FBM, for example, showed that their foreign exchange loss pretty much has reduced by almost 81.27%, right? And even for our consumer goods stickers that we cover, we've seen that again, the fact that now you've seen a good chunk of the FX losses being pretty much just contained, it really had helped their books. And also to mention on the telco side, right? The fact that the FX losses that pretty much just dragged the book of the MTN company has pretty much just stabilized. And yes, for us, we've seen FX stability as one key line item that is pretty much just consistent across all of these tickers.
Right. Now, and for the new week, what investment play do you see investors sticking with in the coming week? Should we expect to see those names that have performed put out impressive numbers? Do you see them still dominating the bargains table?
Yes, we see that, especially for the Tier 1 banks. And particularly, I would like to also react to the oil and gas sector too, right? Because the oil and gas sector, you would agree with me, did fantastically well in 2024. The index posted about 160% return, which of course we saw a bit of profit taking in January, but now with the fantastic reports resolved by Aradel and the likes of MRS Oil and Total, of course we would see that a lot of investors will begin to price in some of this reaction to take position. And of course, I'm sure you're aware that Oando also recently just announced a bonus issue, 1 for 12, right? Even though that is going to be repatriated over a 3-year period. We expect that this also will cause some mixed reaction, of course, in the market, and then we'll see a bit of upside for the oil and gas, and of course, increased momentum as far as the banking is concerned.
All right, Timilehin, we'll leave it there. Thank you so much for walking us through market action this week. Timilehin Junaid, a research analyst at Norrenberger Securities.